have with us a very special guest, Gautam Shah, founder and chief strategist of Goldilocks Premium, joining in. Gautam, hi, this is Samina, and firstly, apologies. I know we've kept you waiting, but we had sugar that was the big talking point this morning, so we had to quickly do a little bit of a detour there. But apologies once again. But let's talk about the Nifty, Gautam. It's great to have you in a morning when the markets are taking a bit of a breather after a very strong run-up over the last couple of weeks. What are you doing on the Nifty? It is a morning of consolidation. Is this an opportunity to buy, or would you still wait if you were going fresh?
Good morning, and thanks for having me. Well, I think it's really been a fairy tale-ish rally all along. You know, these last 3 or 4 weeks, with just about every sector in the market doing well, many underperforming stocks and sectors coming back. And it's good to see the market take a bit of a breather, because I think this was a little needed. And we've just moved in tandem with the global markets in the last 2.5 weeks. I mean, US markets have seen a very similar kind of a run up, and our working number on the Nifty was about 21,500. So we hit this number on Friday, and we seem to be consolidating. But given the fact that liquidity is still so strong in the system, the tailwinds, the positive tailwinds of news flow continues to hit us, and also the fact that seasonally, this is a period where markets end up, being more on the positive side. So keeping all of these factors in mind, I think we will continue to trade with a positive bias. No rocket science to say that we are overbought, but then in strong bull trends, we can stay overbought for a long period of time and still continue to do well. So maybe the index does not see a great move from here. Our medium-term working target is about 22,300, so gradually we should get there. But in the interim, there could be some, much-needed consolidation before we actually move higher. But as we've been talking to our subscribers, I think this is a market where you need to be stock-specific and theme-specific. And like sugar, there are many themes in the market, like fertilizer, power, infrastructure, PSU, pharma, IT, where I think the opportunities are immense, and therefore, your viewers should be looking at committing there.
Very good morning, Gautam. This is Tamanna here. Absolute pleasure to speak with you on NDTV Profit, especially as we're looking like we're going to cap off a very exciting end to 2023 and go into 2024, where most things look positive. So I just want to take this opportunity to get a broader view from you. As such, the big challenge or the big question mark for the markets from an Indian perspective, which is election uncertainty, seems to be out of the way. Having said that, what in your view are the big possible headwinds on the horizon? Or is it all looking up and up?
Well, no, I know it feels like it's all up and up and all's well forever, but I think that's not how markets are. We've seen issues come, out of the window in a day. And we still have a lot of risks around geopolitical factors, around interest rates, around oil prices, around inflation, and for that matter, even in elections, because I think a lot of it is already discounted. People feel that a lot of positives are already discounted in the price, so the risks remain. But, I've been a firm believer that post-March 2020, this is a different India from a liquidity perspective. People like to compare today's bull trend with what happened in the past, but I don't think it's comparable, because today's entire bull trend is domestic liquidity driven. You still have 16,500 crores coming into the system every month, and out of that, 50% is going into the mid caps and small caps. So I think the India's outperformance will continue. A lot of themes, which have done well will continue to do well. This is becoming a very stock and theme specific market. We might be slightly on the expensive side on the index and on the large cap. So you might not see a very big rally, but if you are in the right stocks, you are in the right sectors, which is in the form of IT, pharma, auto, metals, which we like, I think we should be okay. So don't expect fireworks on the Nifty, because I think it's already done quite well and a lot of the positives are discounted. But going into 2024, I think it's just about sector allocation.
And a few months ago, you were quite concerned about Bank Nifty. We did believe that the worst was not behind it. They weren't participating effectively, be it the large cap names or the mid cap or the small cap banking names. Things have changed dramatically since then in the last 7 to 8 weeks. Bank Nifty is inching or trading around levels of 48,000. The bias is very clear on the upside. Are you now bullish on the banking space, or do you think that rally between 40,000 and 48,000 is pretty much all the steam there left, or do you think this rally for Bank Nifty still has more legs?
Well, the way 2023 has played out, you can't hold a view for the entire year
You're right.
because I think 1 year is playing out in 3 months. That's the new normal, the way I see it, having seen the markets for the last couple of decades. Yes, there was a time when we were not very comfortable with the bank nifty because many of them are underperforming. I mean, even at these levels, if you look at an HDFC Bank, it hasn't done anything special. I mean, people are still talking about underperformance, and a lot of money managers are facing issues on underperformance even now. But things have changed, and whenever bank nifty does well, it really helps the market look a lot more vibrant, and that's what has happened in the last 3 weeks. We actually changed our stance completely 3 weeks back. In fact, right now we are as bullish as ever, and we do believe that bank nifty and IT together is helping this market move higher. And I do have a working target of about close to 50,000 on the bank nifty, so I think we will get there, and it will be led by an SBI. So I'm still not a big fan of HDFC Bank. I think it will just be a market performer, but there are smaller pockets in the bank nifty that could actually stand out. So I think banking and IT put together, because it's almost 60% of the weightage of the nifty, I think should propel the market higher or could keep it on the safer side.
Gautam, just because you mentioned IT, now are you liking your mid IT companies better? Are you liking your, big companies, your big boys, as they're called? And do you think that the outlook actually continues to be that positive? Because there is some concern that at least Q3, as far as numbers are concerned, as far as their balance sheets are concerned, is going to continue to be a quarter of pressure.
Well, concerns have been there for the whole of this year, Tamanna. I think that's how IT has played out. I mean, it's so interlinked with the global framework that anytime anything happens in the world, IT becomes the punching bag, and we've seen it a few times. But then it's come out of this situation number of times, and as we speak, look at the kind of rally that we've seen in mid-cap IT stocks. I think they have been in a structural uptrend, and we've been recommending our clients to just stay on, just tag along without worrying too much. But in terms of fresh entry, I don't think mid-cap IT can be bought at these levels because the risk reward is not the best. I mean, you have many of these stocks that have appreciated 50 to 100% in the last 15 months, and it's really been a structural uptrend, irrespective of the market direction. But the big boys, I think that's where the opportunity is. HCL Tech, Tech Mahindra, TCS, Wipro, Infosys to a certain extent. I think this is where the real opportunity is, because your downside could be about 5 to 7%, but the upside, even from here, is about 15 to 20%. This kind of an upside I don't see in the index. I don't see in many other sectors, but IT definitely stands out, given the fact that it's coming out of a long base building process.
Gautam, I just also want to get your take on the whole renewable story building up. Today you had another company talking about their target of, having 60% of their energy source as renewables. It's the big theme across sectors, from renewable financing to companies producing hardware, etc. Do you think this is a theme that will fructify further in 2024, and anything you like in this space?
Well, we don't look at things very closely on the fundamental side because, we are more of a technical research firm. But I do believe that power and energy is a very big theme, which is here to stay. And I think it's a structural story which will work out over the next 3 years. And some of the big stocks, like Tata Power, a CESC, a JSW Energy, and some of the other transmission companies, they all look super solid on the charts. So I think, yes, it is an opportunity, but today is the kind of market where you have to be very stock specific, because within a same sector, you have one stock which is outperforming and you have one stock which is languishing. So I think it's very important that you are in pockets or you are in themes which are moving with the market.
I want to quickly talk to you about gold as well. I know you usually hold an opinion on gold, and today also marks the day when SGBs will be launched. Exactly a year ago, gold SGBs were launched closer to 5,400. Today it's closer to 6,199. We also have another SGB coming up in Feb. Technically on the charts, how is gold looking? Would you recommend a buy on gold, potentially through the SGB route?
Well, I think for the last couple of years, for us, gold has been a no-brainer buy. I think it's just been in a strong uptrend all along. All dips have been bought into. And in today's world where, anything comes out of anywhere, the first thing that moves is gold and silver. And you've seen a fabulous move in the last couple of months. I think gold internationally tested a level of 2100, and then we saw a bit of a downtake. But from current levels, I do see gold and silver actually beating equity market index returns over the next 6 to 12 months. So gold and silver definitely should be bought. SDBs should be done. I am looking at a 15% move from here, possibly a eventual target for about $2,300 to $2,400 on gold, and possibly $29 on silver, which is also a 20% move from here. So I think in today's world, diversification across markets, across asset classes is extremely important as we get into a very important 2024.
Right. Gautam, you've already identified a few themes that you like, but over the next 6 months, what are those stocks or sectors that you'd bet on? You've talked about IT, there's pharma, there's automobile, a couple of dark horses that you would bet on right now for the next 6 months.
See, I think at a 21,400 index, risk reward plays a very important role, because everything is being painted with the same brush. Excel sheets are out trying to discount the earnings of the next 5 to 10 years, which I don't think is the correct way to do things, because, we live in a very disruptive world. But as things stand, I think pharma is a sector that we really like. I feel the index can deliver anywhere between 15 to 20% upside. It's been a phenomenal comeback in the recent past. So that's a space that we like. Auto, I think, has done extremely well, and I feel this trend is going to continue. So the likes of Hero Moto, Eicher Motors, Bajaj Auto, which has been such a beautiful uptrend, Tata Motors possibly going towards 1,000. So, this is again a space that we like. A fertilizer has been a sector that we've liked. Real estate, I feel, is a structural story because it broke out of a 10-year range, and thereafter, stocks have just run away. So I see an opportunity there, but maybe on dips, one can look at investments. So at this point, I think pharma, auto, fertilizer, and power, I think would be the four spaces that we are very positive and commitments can be made at current levels.
All right, thank you so much, Gautam, for speaking with us. Gautam Shah of Goldilocks, talking about what is driving the market rally and what kind of a year that we're going to have.